The US dollar is dying at an absolutely blistering pace. The BRICS countries are creating an alternative currency to challenge the dollar. France is now doing LNG, or liquid natural gas, deals with China, denominated in the yuan. China and Brazil are now trading with their own currencies, and now even the Eurozone is starting to create distance with the dollar. If you've been paying attention to the mainstream news about de-dollarization, then you probably have your panties in a bunch about the biggest threat to the world's reserve currency that we've seen, certainly in my lifetime, but probably in almost everyone's lifetimes if you're watching this video. But the real question is the dollar status as the reserve currency truly at risk? Is China and their plans for the yuan actually a threat to the US dollar? The answer will surprise you. In fact, I was downright shocked by what I learned. But understanding how to position for the coming changes to the macroeconomy is absolutely critical, and understanding the role of the US dollar is probably the single most important thing that you can understand to get ahead of the economic changes coming to our entire world. So today we're going to answer the question: is the yuan on course to replace the dollar? And does China even want the role as the issuer of the global reserve currency? Let's dive in. First off, what defines the reserve currency? What benefits does it have? And what are the drawbacks? The global reserve currency is effectively the thing that everyone trades in. It's the currency used for the vast majority of trade, which undeniably right now in 2023 is still the US dollar. Now, being the issuer of said reserve currency is a great responsibility. It also has a huge amount of benefits in that America can simply print as much money as it wants, and it can buy all the goods and services that it desires. However, there is a huge drawback in that being the issuer of the reserve currency creates huge wealth inequality. We'll explain why in just a little bit. As you can see from this chart, the wealth inequality has gotten exponentially worse in the last 40 years in the United States, with upper class earners earning about 3 times as much as middle class in 1983, and now in 2016, the upper class earns as much as 8 times as much as the middle class, and it's only gotten worse. Income inequality in the US keeps getting worse year over year. It's also the highest in the United States among the G7 countries. So what's clear is that over the last 50 years or so, as the US dollar has been the dominant reserve currency, the wealth gap has become greater and greater year over year. It's a one-way train to the evisceration of the middle class. What might actually shock you is that this is actually an unchangeable, immutable feature of being the issuer of the global reserve currency. Let's explain. This video is going to keep it super simple. We're just going to explain America and Asia, really China, as the 2 players in this global economy. It's going to help you understand the different types of approaches to growing an economy. And you'll see very clearly at the end why we're in the position we're in. The issuer of the global reserve currency effectively expects everyone to take that currency in exchange for goods and services. Now, in China, the relationship is clear. Over the last 40 years or so, China has become the world's workshop, with American companies offshoring their development and production of physical goods to China. Now, as part of this arrangement, China had several policies that effectively were aimed at keeping the value of the Chinese yuan as low as it could possibly be. The lower the cost of the Chinese currency, the cheaper it is to buy goods and services and labor from the Chinese people. That means that China always has the best price on producing stuff. You've probably heard of China manipulating their currency, and that's because they are. It was part of their core strategy to become the factory of the world. In order to achieve that, they needed to have rock bottom prices, which meant debasing their currency. The big losers here are effectively the Chinese workers in the factories that get paid almost nothing for their labor. But the winner is the overall Chinese economy and the big industrialists at the head of those big factory companies. So here's how the world works right now. China effectively sells stuff for US dollars. China then has a huge amount of US dollars, and they need to do something with it. They have 2 options. They could either buy dollar-denominated assets, or they could buy back their own currency, effectively lifting the cost of their currency and enriching their own nation, enriching the people of their nation. The problem with number 2 is that if they enrich the people of their nation too much, the actual price of the goods made in China will eventually become too expensive. They will cease being the factory of the world, and another country, be it India, Mexico, or something like that, would start to take its place and produce more goods and services for the world. They would no longer be the world's workshop. Now, the Chinese policymakers have made it clear they do not want to do this. They want to keep the value of the yuan low. This policy has allowed them to monopolize the role as the global factory. However, it's at the cost of the individual workers. Now, of course, if the workers could unionize, this would all get sorted out. But as we know, China doesn't play that. They come down with the iron fist on anyone who tries to act up. This is why that same approach wouldn't work in the United States. But now we get to the big question. If we're expecting China to keep accepting US dollar for literally everything they do, then they need a place to put that money. And where do they put it? Mostly into government debt, stocks, and real estate. And this gets to the core of the issue. In order to issue the global reserve currency and expect countries around the world to accept it, well, you need to have a place for them to then reinvest that currency, for them to do something with that currency. And that is why the United States must have what's called an open capital account. America also has very little tariffs on imported goods. This allows other countries to send things and sell them to America very cheaply and effectively outcompete America on cost. The effect of this has been very clear. American companies outsource production to other countries and are able to sell things to America at a fraction of the cost. This allows for American companies to keep making higher and higher margins on the things they sell. But the big price is paid in the fact that the American workers aren't participating in this growth of the economy. A staggering 90% of all stocks are held by just 10% of the wealthiest Americans. But I know what you're thinking. The other countries are buying goods and services with US dollars. They're investing in the stock market. Isn't that a good thing? Doesn't everybody win? Well, not quite. You see, part of this open capital account thing is that the US banks end up getting flooded with foreign depositors. Other producing countries around the world effectively reinvest into stocks, bonds, equities, and create a metric ton of deposits within the United States banks. They then lend that money out aggressively. And eventually, as we've just seen with the banking crisis, there are periodically crises that emerge with this policy, and that banks have balance sheet issues that they have to shore up. Now, we've seen last week that when given the choice between letting banks fail and printing more money, the government will choose every single time to print more money and supply more dollars to the world. Otherwise, you get a massive financial crisis, which will only lead the world to distance itself more from the US dollar. This has happened several times throughout history. But understand this is a guaranteed outcome when you combine the open capital account of America and the structure of fractional reserve banking. There's simply no other outcome, and I'll explain a little bit more as to why. You see, being the issuer of the global reserve currency means more than just supplying the money and allowing people to reinvest it. You need to actually provide a return on that capital. And that's why modern day companies are so much more focused on share price, stock buybacks, and other ways to manipulate the value of the stock and the shareholder value up versus actually providing better goods and services or better value to their customers. Effectively, America is just a modern financial equation. You see, China would have no use for these dollars if they couldn't earn a good return on those dollars. If those dollars weren't that useful at making more money, they would simply convert them to other assets like their own currency or gold. But the fact is that they know that the way the American financial system is set up, it's actually designed to constantly reward people who invest US dollars back into the system. Get this, the unwritten rule of being the global reserve currency means not only must you open your system, but you must secretly create constant returns on that money through the form of printing more money and creating inflation in asset prices. You absolutely must create this value accrual to the asset layer, or else no one will want to hold and reinvest your dollars. They will simply convert them to other assets. The average salary earner is the one who gets screwed here, and most people don't understand that. This is simply a natural consequence of fiat, and specifically the global reserve fiat. So when we start talking about de-dollarization, the question is, does China really want to replace the dollar? And the answer is absolutely not. They don't, because if they opened their capital account and let capital flow in, it would actually screw up this whole we're the cheapest place to make stuff thing that has allowed for their astronomical parabolic growth. It would enrich their citizens and probably cause some form of social unrest against the elites. The reality is China loves this situation where their citizens scrape by and they're able to become this powerful workshop for the world. The other reason is that China has a ton of debt. It's super over leveraged, just as much as the United States. But the difference is that it owns most of its own debt. If it had an open system like the United States, then other people would be able to call in and demand that that debt be paid. When other people call in debts to be paid, that's when financial crisis can happen. As you know, China's Evergrande commercial real estate bubble popped about a year ago, but we still haven't seen a true collapse there. And that's because China is internalizing those losses and deciding to dole out the pain little by little. If they owed debt to other countries, this could become a much bigger show, and they don't want that. So let's get to the brass tacks here. Is de-dollarization happening? And is the yuan looking to replace the dollar? Well, de-dollarization is certainly happening. And this is partly not only because of the inflation and instability in the United States, but truly also because of a hugely heightened political risk in the United States. We've never seen division like this, where one side believes the other side is truly evil and inhumane. There is a political division where people are legitimately questioning whether an orderly transition of power between Republicans and Democrats will happen. Combine this with everything else going on, you understand why China is lessening its dependence on the US dollar. But bear in mind, they still take in hundreds of billions of dollars each and every year. They can't just abandon ship here. So if China's not looking to replace the dollar with the yuan, how do we make sense of all these headlines about them moving away from the dollar? Well, it's a multi-step process for China. They do want to distance themselves from the dollar. They definitely want to reduce their dependence on the dollar, but they also don't want to become the global reserve currency. That means that we can only turn to one asset as the global reserve currency in the short term. And that, my friends, is gold. Looking at this chart, you can clearly see that gold buying has had a significant uptick starting in 2008, where you can see emerging market countries are buying up gold as fractions of their sovereign wealth. The pivot point here was actually in 2008, not in 2023. By this measure, de-dollarization actually started 15 years ago. In fact, just today, we heard a news article that 19 countries have joined the BRICS nations in creating their own economic bloc. So what's the conclusion here, and what does it really mean? Well, the conclusion is that we're entering into a new financial paradigm, one in which there are several financial blocks. The BRICS are clearly one financial block, and we still have the Western nations, which will probably trade with US dollars. But for any imbalances in this trade, we'll probably see a new gold standard emerge, where nations look for a neutral asset that they can be more reliant on. The rise of gold is almost inevitable in this new paradigm, and I know you know where I'm going next. In a world in which gold becomes central to international trade, in which trust between nations is gradually eroded, and the mainstay asset that everyone has used to lubricate the international global economy is no longer favored, well, you can understand where gold will start to fill that void, as it's been trusted and used for not just centuries, but actually thousands of years. But of course, shipping gold bricks around the world is extremely costly. There's a lot of logistics involved, which big nations will have no problem figuring out. But the reality is that in this world, Bitcoin starts to become extremely valuable. It's the hardest money ever created, and its role in international trade is almost certain to accelerate over the coming years and decades. In a world in which the United States dollar is no longer the reserve currency asset of the world, but the Chinese yuan has no desire to replace that asset, given its closed capital account, its desire to maintain its status as the world's factory and workshop, the idea that Bitcoin could soon become a global reserve asset in tandem with gold is something that is not just exciting, but seems to me downright likely. It also explains the tightening conditions in the United States and the West around access to cryptocurrency. You see, having a flight of capital out of the dollar into things like gold and Bitcoin is actually disadvantageous for the West. But in the end, they can't fully close down their capital accounts. They can't close down the system, or that alone will challenge the status of the US dollar as a global reserve currency. So they're making things more difficult, but they simply cannot close the gates, as the openness of the US dollar is absolutely required for its global reserve currency status. So this is China's endgame: reduce dependency on the dollar while simultaneously increasing its dependence on things like gold and Bitcoin. If you're following the tea leaves here, it's clear that accumulating gold and Bitcoin over the coming decades will be some of the most powerful economic decisions and financial decisions anyone can make. We're entering into hard times, and it's time for hard money. As always, I hope you enjoyed this episode. A lot of the research here was based on an article from Arthur Hayes, Crypto Hayes. I'll link it in the description. A big shout out to Arthur Hayes, who's actually been bang on about his theories about macroeconomic changes starting at the beginning of the bear market. Now, he's made some bad calls on specific coins and timing. However, where I think he truly excels is viewing the total global picture of international trade and economic forces. To further this point, please watch this video where I talk about China or Hong Kong legalizing Bitcoin and cryptocurrency as property. This is clearly part of a bigger plan here, and I look forward to finding out more with you all on the next episode.